And while you're chatting, make sure that you select, there are a few options about whether it's just the panelists or everyone. So you need to select everyone if you want to share your thoughts with everyone. So for the newcomers, we uh, none of us are experts in this. We are a community, so the idea is that we help each other out. We discuss ideas, we discuss themes, and so just the disclaimers. We are not professional investors. We are DIY investors, and we just learn from each other. Again, and we do not touch anyone's money, so you decide what you want to do with that. Yeah. So to start with, again, for the newcomers, we are a group of 6,500 people across 13 groups in 5 countries. And our plan is to expand. Our plan is to kind of collaborate to the extent possible using, using tech tools that, in general, we can use on social media, but also, I run City Falcon, and we're trying to bring all of that together for value investors and investors in general on City Falcon. So this was one of the most shared images on social media with kind of different messages. And of course, it's not completely fair because the week before this, we also saw one of the sharpest declines from the 1930s. And then this came about. But I just wanted to pause here if anyone has any thoughts when you look at this image or from all the discussions you've seen on social media. Like, what do you think when you look at this? Elisa, go on. Okay, we couldn't hear Lisa. Anyone else wants to say anything? Okay. All right, we'll move on. But this is, some of it is obviously unfortunate because, a lot of people world over are losing their jobs. And, all of this could come back to bite us in terms of consumer spending, in terms of other things, civil unrest, and all of that. So yeah, so this was what we had. Now, very quickly, just to see, who the people are, I'm just going to just quickly run a quick poll. So you will see a message on your screen. Just select appropriate options so we know we have a feel of the audience. All right. So actually, the profile is quite different from yesterday. So let me just quickly share it with you guys so you guys can see it. For the people who polled, uh, more people with less than 1 year experience, and a lot of people saying wait and watch, which is interesting. And then there is other options. Yeah. Okay. Let's move on. So, I mean, S&P 500 is usually what we discuss, and mainly because there are 500 stocks in this, so quite diverse. And obviously, what we've seen, so this is a 1 year chart, is that we were at a high of 3,300, then we dipped to 2,100, and now we are back to 2,800. So if you look at the decline that has happened, is literally nothing, right? It's about 13% for the changes that we've seen in our lives with unfortunately people losing their lives, jobs, we are in a lockdown. So any thoughts, what do you, when you look at this, what do you think about this? Just a 13% decline from the top.
I would have expected it to fall further. I'm expecting it to fall further as well, given the job losses and everything going on.
Yeah, no, absolutely. And same, yeah, for me as well. And what do you think, why do you think this has not happened? Any ideas?
None whatsoever.
Okay, fine. Yeah, that's fine. I mean, and thanks, Dennis, for putting it in chat, saying you're a beginner and you're only listening. That's fine. So I'll keep pausing just to try and make it interactive. Otherwise, you might go to sleep. But it's okay that you guys may not have opinions on this. Yesterday when we did the session, we had a lot of people with more than 5 years of experience, and so we saw a lot of interesting comments and discussions. What I'll also do is, and reach out to me if I forget, I'll also share the recording from last night so that you can go through that as well, and get views from other people instead of just me. Um, so one of the things I would typically do in the past is when something like this happens is to look at the volumes, right? And the reason to look at the volumes is that to figure out, hey, are people actually buying? Is there a lot of activity happening? Because I mean, at the end of the day, a stock price moves based on demand and supply. So if there are not a lot of people selling and buying, but some transaction happens 10% higher than the price yesterday, the stock is up 10%. But that doesn't mean necessarily that there has been a lot of activity. So what you see is, so this is a 3-month chart, right, for S&P 500. It's the same chart as earlier, just the smaller duration. And as you see that when the decline happened, there was a jump in volumes, right? And this you expect because it came all of a sudden, and people are reacting. So, and then you have algo trading, you have, just traders, everyone trying to get in or get out. And so you see volumes jumping up. But then you see that it's declining. So the rally that has happened, okay, has happened on lower volumes in the declines, and this is kind of expected. Also, interestingly, they're very similar to before the decline started. Oops, sorry, just my computer just crashed a little bit. Let me just move this. Yeah, sorry about that. It's my computer, which sometimes gives an issue. Just give me one sec. Oh, yeah, it's here. Okay, sorry about that. So yeah, so if you look at this, there isn't much to take out of this. So I was hoping that it would give us some indication, but not much. Anyone else has any thoughts when you look at this? I mean, Sandeep, I know that you trade a lot. Oh, Tom, go on.
Um, just my thought. I don't know how valuable it is, but I wonder if the reason that it hasn't fallen further is because that UK, the government has jumped in with a lot of business support. It felt like the plummeting stopped at the point that the government up with lots of different packages for businesses to keep them going.
Yeah, and Tom, do you think that's effective? Like, if you were to look at the packages being offered and who and the organizations and the way it's been rolled out to people, do you think it's the best way of doing it? Okay. Did anyone else wanted to say anything? Okay. So yeah, so I think, Tom, very relevant point on the government support. Yeah, so we'll talk about that. So one of the things before we jump into that, sorry, Tom, you wanted to say something?
Oh, sorry. Yeah. I'm having problems with the mute and unmute. I thought I was muting it, unmuting it, and I was actually muting it. So you missed my last comment. My sense from the media is that businesses were pretty happy with the way the government was doing it. There were some issues for some businesses, but the response was generally good.
Okay, that's interesting. I mean, I run my own business. We had a team of 39 people before the crisis, and then unfortunately we had to let go of 8 people, just because the revenue pipeline has disappeared. Nothing is there, and I'm still discussing support from the UK government. So we'll talk a little bit about what has happened with the support and where a lot of this money has gone. And I actually think that the way it's going now, we're going to create another crisis soon, and we'll talk about that very soon. So before we jump in, one of the things that I want to highlight is that just because you see the stock markets moving in a particular direction doesn't mean that, it's considered everything. So this idea that you learn if you do a course in finance in a university, they'll tell you that, hey, stock markets are perfect. They can absorb information very quickly, and the prices react to information very quickly, and everything is pretty much priced in. And this is why they say, hey, there is no point stock picking and just buy the index. However, if you look at it in reality, and this is what most value investors will tell you, is that the fact that markets are not perfect, they're imperfect, which is what allows you to find opportunities, which is what allows you to make money. And this is kind of a reminder that I keep telling myself. So what we need to differentiate as value investors is between price and value, right? So just because the markets are going up doesn't mean, hey, I need to jump in and I'll make money. In fact, as most of us would do, you need to be contrarian. So you need to buy when there is panic. And we saw that panic when the index went down 30%, but that panic is no longer there. Now we actually see bullishness. Now people are talking about, hey, reaching new highs in the US stock markets. So it's completely different. Any questions at this point? Do you guys understand, beginners, between price and value? Okay, no comments. Yeah. So let's move on. So why has the price gone up, right? So, and this is how I'm going to structure structure this discussion. So now we're talking about price and not about value. Okay. So one, we saw that the governments are pumping in money, and this could be, stimulus in the sense of governments buying bonds or securities from the markets, or, supporting banks because they're too big to fail. Or bailouts, so be it airlines or tourism or things that have been completely affected, like restaurants. So the governments are supporting them, and then all of this basically results in a lot more liquidity. So a lot of the people getting a lot of money in hand need to deploy that money somewhere, and so a lot of that money ends up coming back into the market. And this is a very dangerous scenario. This is the same scenario we've had 10 years before, where governments have been pumping money, printing money, and then also the interest rates being so low. So you could actually get a loan at a really low interest rate, and then you would take risk. And all of this kind of creates a bubble. With everything that's going on now, what we're working towards is another bubble. So the way the monetary and the fiscal policies are running right now, and again, I'm not an expert, I'm not an economist, I've studied economics, but what it means is that every recession going forward could be worse, right? Because the market has certain expectations, and those expectations further inflate the prices. So we'll talk a little bit about that in further slides. The second thing is short covering. Now, I know a lot of you guys are beginners. So what is short covering? So let's say when the markets went down 30%, a lot of people took short positions, and these could be traders. These could be people who want to hedge their portfolio. And the idea is that you make money if the market goes down. That's why you short, right? Now, what you suddenly see is that the central bank started, the stimulus and everything, which meant that the prices of securities started going up. And when this starts happening, what the people who've taken short positions is to sell those short positions. And this is what is called short covering. So the reason why markets could be going up is not because people are buying for long term, but because they were short on a stock, and now they need to buy it back. And that pushes the prices up. The third thing could be, of course, people are looking for value. Some people from last night that we spoke to, that we were discussing with, said, they invested when the markets were really down, so they made some money. So that is there. And the last thing is, like Sandeep said earlier, is sector reallocation, right? Things that were maybe you didn't hear about, like Zoom, for example, what we're using now, and now suddenly they have 200 million active users a day, right? So the sectors have changed, and so all of these things have affected and helped the index go up. So yeah, any thoughts, any questions, comments at this point? Yeah, go on, Tom.
Just making sure. Yeah, I'm on volume. Just think the thing that strikes me, given what you were saying about volumes, which is not something I've thought about, is with sectoral reallocation. Wouldn't you expect to see that more in volumes than in the price?
I mean, it is both, right? Because what you will see is, and again, I mean, so it again depends on weightage, right? And what you're watching. So let's say I'm watching S&P 500, and one of the biggest components of S&P 500 is Apple. Okay. And so let's say I sold some airlines and I started buying Apple, right? So that might push the index up depending on the weightage that Apple has in the index. And doesn't have to necessarily do with volumes. But again, if fewer people are buying and fewer people are selling, that might push the price up again quite a bit. Does that make sense, Tom?
I think so. Yeah, I think I see what you mean. I can certainly see that with a heavily weighted stock, if people were buying into that, it might push it up. But yeah, I mean, yeah, I'm to think through that one. I'm not quite seeing it, but
yeah, I mean, yeah, it depends on the the detail here on what happens. But again, the reallocation could be at a higher number as well. So for example, and again, it's kind of interrelated. So there's more liquidity, so there's more money, so people are buying more, and maybe people are selling less at this point, saying, hey, everything will go up, or reshuffling their portfolio, moving things around. So a lot of those things could be happening. Anyone else? Any thoughts on this before we move on? Okay. So this was when I read this, I was shocked, and I think so were a lot of people who've been in the markets. So I've been, investing in the markets for the last 20 years, and when I looked at this, I was like, wow. So for people who don't know, junk bonds are companies that are, have really low credit rating, which means that there's a high risk of the company going bankrupt or not being able to pay back the interest or the loan. And typically you get a higher interest rate on these bonds for the higher risks that you take. Now what Fed did basically with this move is that they basically gave a phenomenal return to people who are holding these bonds. So the Fed jumped in and said, okay, we will support you. So what do you do as a trader, right? Who, let's say that you bought a bond that gives you a 10% interest rate, and you've been holding that, you've been getting that interest rate. Now, when things go bad, suddenly the Fed comes in and supports you. Like, what would you be thinking? Any thoughts? So for me, the thing that I thought, yeah, sorry, go on, Kirandeep.
I was thinking I'd probably buy some junk bonds because I expect the government to support me.
Exactly that. So what the government is telling you is go on, take more risk. If things go bad, we'll support you. And this is what has changed. So when someone looks at this, I'm like, okay, what I should be doing is just buy risky securities, right? Because government's always going to bail us out. And this is why I said, if this behavior goes on, where the risk goes higher, people taking more risk, the next recession could be worse. Also, what this means is that less and less traders will take short positions, and we need traders to take short positions because they help keep the price in check. Imagine if everyone just keeps buying a stock irrespective of their earnings or anything else, and just hold, so everyone makes money. So it's kind of a massive Ponzi scheme, like no disrespect to anyone who trades in cryptocurrencies, but we've seen a lot of cryptocurrencies because the price goes up because everyone's buying, right? And this is a massive risk, and I was really shocked to see this happening. And this was one of the trigger points, like when the Fed got into the bonds market, not just junk, but all kind of bonds, that the stock market started rallying again. Just the extent of the support, and also what the Fed and other governments are saying, hey, we can do unlimited, we can have unlimited support. And then there are underlying questions about, okay, so you're going to print more money, which could possibly cause inflation when things go back to normal. Is there a way to kind of suck this liquidity out? Will you be able to raise interest rates again to keep everything? So there are a lot of questions, and less ammunition that governments and central banks could have in the future. So it's not great. Yeah, go on, Tom.
Can I make a what's the word? A distinction.
Sure, go on.
Draw a contrast between the current situation and the credit crunch. In that, with the coronavirus, it feels like it's reducing businesses' ability to turn a profit in coming months and possibly years. Whereas with the credit crunch, that was only the case because the credit to the businesses was drying up. So supporting, allowing businesses to access credit, for example, in the during the credit crunch, could turn an might otherwise fail into one that could continue to succeed. Whereas in the current environment, it's a different kind of support that's needed. It's not an issue with short-term finances. It's more an issue that the underlying demand for the business is reduced.
Yeah.
And I raise this because I had an experience with one of the things I've got involved in is peer-to-peer lending, slightly outside the scope of the current discussion, but it probably has a bearing on it. With the credit crunch, I would have been quite happy to get involved in more peer-to-peer lending had it been there at the time, had that option been available, because it would have helped a business continue. Whereas in the current point, I'm more so because businesses don't have that return, and I wonder if something like that is the case with the with this investment in junk bonds. That unless you fix the underlying issues of the businesses, then just providing them with a short-term boost through buying bonds is not going to help them in the long term.
Yeah. No, Tom, absolutely. Thanks for sharing those thoughts. Absolutely agree with you that there is a distinction between so the different views in the market, right? One view is absolutely right. This virus was completely unexpected, and it is not the fault of the businesses or people that this happened. Another view is that we knew that everything was pretty inflated. Any asset class, unemployment was at historical lows we'd not seen before, to the extent where businesses like ours was struggling to find talent. So even if you find someone to hire, they would ask a lot of money, and you would struggle to sustain yourself as a business. And what the virus did was, as part of the second view, is that it basically was a trigger to stop us from moving ahead in the same kind of low interest, the government's printing all the money and all of that. So I do agree, that you are in the first kind of, hey, this is a disruption different from the credit crunch. However, Tom, if you were to think about this, right? So the government has a limited pot of money, even though it says, unlimited things. Now, when they go and buy junk bonds, who are they supporting? So junk bonds are bought by, let's say, some of the banks, maybe by hedge funds, maybe individual traders. So now what happened was you pumped all this money and you gave all of this money to these guys. Now, will this money actually trickle down to you and me, or the small businesses? And this is what I think people are worried about. They could have used this money in other ways instead of supporting the market. I think the Fed's rationale over here would be that, let's say these junk bonds are owned by another bank or someone, and then if they struggle, then if one of the too big to fail banks come down, then the whole economy struggles. But the general view from anyone in the market is that, hey, what this move does is just supports risk taking, makes rich people richer, hedge funds richer, and the money doesn't trickle down. So, I'm running a startup. I haven't seen a penny right now from any of the schemes from the government to this date, but they just bought junk bonds. So, yeah. Another thing is, and we discussed this in our previous meetups, especially the one in London when we met in person for whoever was there. We talked about, I think we were talking about Boeing at that point, and we talked about how so people were like, hey, we're going to buy these kind of, companies because they're very important. They're strategic, there's strategic importance in having your national airlines and other services. But what is good to see is that government is asking for ownership. So it's not free money that's going out. So if you look at the deals that have been proposed to a lot of the airlines, what you see is, apart from the grant, they also have warrants. Now, for people who don't know how warrants work, it could be like an option to buy shares in the company. But for investors like us, buying a stock of an airline means that the equity will be diluted. So it affects the price of the company. Yeah, Tom, go on.
just agreeing with what you're saying, really.
Oh, are you? Okay.
Sorry, I hadn't realised that my hand was still raised. Apologies, not using the buttons very successfully.
That's okay. That's okay. We are all getting used to Zoom. Okay. Cool. Yeah. So, so airlines in this comment. Now, another thing which was very interesting is, so I was a bit lucky going into this, this downturn. So I had short Boeing, and the main reason for me shorting Boeing was the management and how the company had been run and how they're focused on profitability more than the safety of the planes and all of those things. And I was lucky, the stock is down like 60-65%. But one of the things that again came out with these discussions is that the CEO saying, hey, we want help from the government, but we're not ready to give any ownership stake. What does this mean? I want free money, right? And this is why are they asking for free money? Because in the previous recession, they could have got free money. A lot of companies got free money. And this is what I mean is, if you start building up these expectations, then more and more expectations come out. Now, what the CEO has also been kind of implying, saying, hey, if you don't give us the money at our terms, there are going to be a lot of redundancies. And I was really shocked to actually see this. It's like when you're asking for money, this is what they're saying. They're saying, hey, we've just looked at all the other options and we've got plenty. Not sure what options they have at this stage. And any thoughts on all of this, on the bailout of companies? Okay. I think at this pace, we're going to finish very soon because less questions. Right. So now this is my biased view of how the bailing out is working, right? And I sit here in SMEs. I'm running a startup. So what we're seeing from the government is bailout of the markets, the banks, the hedge funds. So the one funny story that has come out of, I think it was in New York, where in the US, the government has schemes for SMEs. And one of the criteria is you need to be less than 500 people. Now, what has happened because of that is a lot of hedge funds are applying for this scheme. Imagine that. And the whole idea with hedge funds is that, hey, irrespective of the market going up or down, they make money. And they did actually, most of them made a lot of money out of the volatility. So they are there. The second category is, hey, all these profitable enterprises with, shareholders who are billionaires, who've been giving out dividends for, the last 10 years, who've been buying back stock to support the stock price, they're getting more money, right? Hey, I mean, so profitable. And then you have consumers, right? People like you and me. Not everyone's going to be eligible for all the schemes that the governments have, talked about. Not everyone's going to be able to support, your mortgages, your other responsibilities, if you have a big family and all of that. And then, SMEs, because, we are not a lot of our companies are not profitable because, we're building a company, we're growing a company. It takes time, right? I mean, there are companies that are not profitable, right? So Twitter had not been profitable, Facebook not for a long time, and we hardly get any support from the governments at this stage. So I've applied for a loan from a high street bank. We'll see how that works out. Right now they're asking for, so even though the loan is 80% backed by the government, and as a founder of the company, I do not have to give any guarantees. They're still asking for, my kind of personal financial situations. A lot of things that I thought should not be relevant. But yeah. So Lisa, did you want to say something? You're on. Yeah, go on, Lisa.
No, sorry, I'm just figuring out my.
Yeah, we can hear you now. Hey, Lisa, go on. Oh, okay. You were just trying some things. Okay. Right. So yeah, any thoughts from anyone on bailing out? Like how you think this is working out? How the governments and central banks are spending the money?
My take on all this is we're going to be paying a lot of taxes to fund all this. Ultimately, I think the money's not reaching where you want it to reach. The people that have the money, the companies that have the money, are probably benefiting more than individuals.
Absolutely, and this creates a lot of issues, right? I mean, people without jobs and all of that. It could lead to civil unrest. It could lead to crime. There's so many things to solve, but what this whole process has done just made richer, and other people left to survive on their own, unfortunately. And so if you're looking at companies, if you're looking at stock markets, you can't just go in assuming that the government's going to bail out every company that you look at. So you'll have to be really selective of what you buy in this market right now, if you decide to buy, that is. So I mean, the other thing is, it's not just companies and people, right? It's countries. And so countries are asking for a bailout now. The very interesting discussion that we had last night as well on this is, I mean, if you think about the US now, the biggest trend that the US has is it's got the US dollar, right? Now, US dollar is a reserve currency for, I don't know, 60-70% of trades that happen globally. So everything in commodities and all of that. Now, so when they print more money, it actually doesn't really matter. Like, you're not going to stop using dollars, okay? Which is kind of crazy. Like, all of this support that came out, all of these things that are happening, but the dollar doesn't weaken, right? But imagine if you're sitting in Argentina, if you're sitting in India, you're sitting somewhere else, and now you start printing a lot of money. What is going to happen? Your currency is going to crash, okay? So you have limited tools at this stage, all the developing countries, to survive. And so now we also hold a risk of, countries failing, countries not being able to repay the debt. So remember that a lot of these countries take debt in US dollars or pounds or euros. And if the US dollar appreciates against the local currency, they will need more money to support paying back those loans, which is a complete nightmare. Yeah. And any thoughts on this? Any thoughts on countries and what that could mean for the global economy? Okay. So just kind of reiterating the point that we made earlier, which is, when you look at your risk when buying stocks and even other securities, there is one risk which is kind of macro market related risk, and then there is obviously the stock related risk. So what all the actions in the US has meant is that, hey, the market risk is less relevant. Something goes wrong, these organizations will support us, and this is a risk on attitude, which is really, really dangerous at this point. Yeah. And actually, just on that, and this is one of the reasons I am actually not buying in this market, because this really concerns me at this stage. If there is a company that fails, if we have a Lehman Brothers or Bear Stearns that happened back in 2008, 2009, then all of this support goes, and then people will be looking to reduce risk, and suddenly, we hit another low on the index. So something to kind of think about. So I know a lot of you guys are beginners, and this can be a little bit confusing, but this is something called the volatility index, or the VIX. It's also called the fear index. So when it goes up, it means that things are bad. So in March, when the market was falling, it went to 80 plus, and now it's about 37. So you've seen the decline. So it's kind of inversely related to the major indices. Now this one tracks S&P 500. I look at this, and I have a little bit of trading portfolio. I trade in this because I find it easier to understand and kind of speculate. So it's not a value investing thing, but I mean, just monitoring this gives you a sense of what people are doing. I know, again, it's a bit complicated, but if you have some time, read about VIX and how it's calculated. It's about looking at out of money options, put and call options. And it can help you understand a little bit more about the market. So, I mean, Sandeep talked about sector reallocation. So this I picked up again for S&P 500, but you could look at any other index. And so let's look at this, right? A 3-month performance. So you see that the biggest decline we've seen is in energy. And that makes sense because, with what has happened with the oil price. And so on the production side of oil, we will have issues where, companies can't sustain themselves, especially, in the US. We've seen a decline in financials, which is what you typically see in any kind of crisis. And then you've seen industrials going down quite a bit as well. What we see, however, is that consumer staples haven't fallen a lot. So, the basic necessities that you have, of course, healthcare, IT, there are some significant positives that have come about from more and more people being online now. And yeah, and utilities, not a lot of fall. Any thoughts on this, on the sector reallocation, things that you see have changed in behavior, sectors that you think will do really well going forward and sectors that might struggle? So for example, airlines and tourism might struggle until we actually have a vaccine, even if you open up the lockdown. So any thoughts on this?
I'm thinking that the consumer discretionary will fall a lot because we haven't seen, right now we've got support for jobs for the next 3 months, but what happens afterwards? How long is the recovery going to take? So given the figures that we had, the other screenshot you had from the United States, where 14 million people have lost their jobs, I can't imagine consumer discretionary being supported much more. I think people are going to be like travel, all these things. I don't imagine travel going back up to the levels we saw before the crisis. I don't think some airlines will definitely struggle. So I don't see flight prices being as cheap as they are now or they were before. So I think we're going to have a lot of changes ultimately.
Absolutely. I mean, thanks for bringing up this point. We had this discussion yesterday as well. And I don't know if you, in terms of timing, this was perfect because Apple announced a cheaper iPhone, right? A $500 iPhone. And so you're absolutely right. I mean, people have to rethink their way of spending money, right? Buying on credit card, buying in advance, those things are going to need to stop. I don't need to upgrade my phone every 1 year. I don't need that fancy laptop or that fancy car anymore. Because I might not have a job. Agreed. Tom, go on.
I would agree with that analysis. Travel is an area that struck me as probably going to have less, or a bit of a decline in future years. I think people are learning that they work at home, that they can talk to each other from at a distance, and therefore the amount of business travel, I suspect, will reduce quite a lot over future years. It's probably a trend that has already started and will probably accelerate now, but it probably wouldn't be I'm not expecting it to be an overnight slashing for over future years. It's just, I suspect it's just a slight acceleration of a decline.
Absolutely. And with all of these things, we don't know if this is medium term or long term, right? Maybe we have a vaccine in 5 years and everything goes back to normal. Maybe there'll be the next generation that comes about, which may not have seen what we are going through now, and things could change. But you really need to look at your portfolio and see how things change. So for example, I own a stock in one of the biggest gym chains in India, and going to a gym is pretty much a no-no for now. You don't want to be around sweaty people, spreading the virus at this stage. So what I have done is personally, I just bought a home gym for myself. So I'm going to do everything at home. I'm not going to go to the gym. So things, you have to look at pretty much every stock, every sector in your portfolio, and maybe, reallocate that over a period of time. So kind of, what we just discussed, I mean, these behavioral changes and whether these would be temporary, these would be permanent for consumers, also for businesses. So one thing is, we've seen increased tech adoption. So more and more people trying Zoom. And I think, Tom, you kind of alluded to that about not needing to travel anymore when you can do video calls. But just a change of mindset, right? People who wanted to meet in person, that was their only way of socializing, now are changing things. I don't know if you know, but with the younger generation, there is an app called House Party, which is becoming really popular, where people are having parties, a lot of things you can do online without meeting in person. Um, on the opposite side to that, after this is over, maybe people will appreciate outdoors more. So we might see a change in attitude when people are outside. Again, who knows? You might be less on the phone and enjoying the simple things of life more, like taking a walk, meeting friends, having a drink, which probably we took for granted before this crisis. Any other changes that people might think might happen? All right. So one of the stocks which has gone really crazy is Amazon, and this is not like a penny stock. It's like trading at $1.3 trillion, and as you can see, it's hit kind of an all-time high. So the way you read this chart is the light blue line is Nasdaq, is the index, right, which has gone down 8%, which is not a lot in the current situation, but it's all mainly tech companies. But Amazon at the same time has gone up 22%. So as people look to shop more online. I mean, all of this obviously is at the cost of the major high street brands and departmental stores. We know about Debenhams, we know about other companies. So this is unfortunately the case. Any thoughts on Amazon and whether you would be buying Amazon at this stage at $1.3 trillion? Yeah, go on, Tom.
I guess it's a time that an existing trend may have been accelerated. That I think Amazon and online buying has been growing for years, and this is just going to give it another boost. I think the internet has changed a lot, but if it's changed one thing more than anything else, it's probably the way that people shop, and I suspect that will continue. Something that struck me just a moment ago was that one other possible long-term trend is around shopping. That again, supermarkets have been becoming more dominant over decades, and this has given them more of a boost. People are now doing almost all of their shopping from supermarkets because it's their only option. I don't think that's going to lead to complete decline in independent shopping, but I think one of the trends that I've seen is that independent shoppers succeed when they show that they have an extra quality and provide something other than just purchasing. They provide some sort of buying experience, and so any independent chains that don't do that, I think are likely to suffer, suffering over recent years, but probably will do so more as a result of this crisis.
Yeah, absolutely, Tom. I mean, yeah, these trends are what we should be looking at as well. I mean, things like Ocado and stuff. What was very interesting though is I was discussing with some of my techie friends, and one of the things we observed is that most of these websites actually struggle with online shopping, or most of these supermarkets were not ready. They don't have enough trucks to move around and deliver things. While Amazon was really well integrated with the distribution and all of that, and that gave it a massive boost. But also basic things like the website struggling to take orders, with the traffic coming in. Now today, where everything is in the cloud and you can scale very, very easily, there's also a question about the infrastructure of a lot of these companies, which again is a boost for, technology providers to actually improve a lot of these things on the internet.
Well, and distributors, any companies
Absolutely.
that are involved in distribution.
Yeah. I mean, I've had discussions. So I live in Malta now, and I've had discussions with some of the people here who kind of the Uber Eats kind of thing, or Deliveroo in Malta, and they make more money than most other professions right now. Okay, because there's so much demand for all of that. It's just to deliver stuff, which is completely different from before. There's a company that is working on robots and drones to deliver your food and pizza, and they have tested a lot of this in London already. So some of these things are going to be live soon. So yeah. So let's move on. So, so when we obviously look at, companies now, we need to look at value. So I just did a simple analysis, not very detailed. But if you look at what the consensus estimate of their earnings is, so they say, okay, they will make $40 per share in 2021. Okay. And this is probably before the virus. So let's assume it's higher. Let's say it's, $50, just to take a number. So for a company that trades at 2,300, $50, so you're looking at a price earnings ratio of 45. Now, the way I look at a price earnings ratio is I'm ready to pay 45 times earnings if I can see that the earnings can grow by at least 45% a year, right? Compounded. So if you believe that might happen, then, Amazon is a buy, but unlikely at this stage, just because it's already a pretty massive company. So for it to have, such a high growth is going to be difficult. Yeah. Netflix, another stock that has done exceedingly well, reaching another high. Obviously, people, staying at home, watching movies, playing video games, doing those kind of things. Any thoughts on Netflix from anyone? Yes, Sandeep, go on.
Also follow trends. So Amazon and Netflix, if you look at their pricing, it's the peak was reached last year on or in 2018 July. And what's happened is it's sort of playing within the peak which was reached in July 2018 to now. So there is the point is that these technology companies which are there, they are strengthening new companies which are now going to take a bite out of their share of the market. So Netflix, you have Disney coming in Amazon. I know the supermarkets are weak, but they will get stronger in this kind of thing. So you might see that their profit ratios are not coming. So like Netflix, you got Disney, you got, I don't know, there are a lot of other people are coming into the market.
Yeah, that's a fair point, right? Any lucrative business, you will see competitors coming in. Yeah. Sorry, go on, Sandeep. I didn't want to interrupt. Sorry.
No, that's fine. That's all.
Yeah, yeah, yeah. And also Sandeep looks a lot at the charts. So, so that's what he was mentioning as well. Okay. I mean, the other thing to consider about Netflix is one of their strengths was, original programming, right? They're creating their own series, which are not on Netflix or Amazon Prime. But given where we are now, they're not going to be able to shoot new series. So one interesting discussion, one interesting point was made last night, which was, hey, but that also means the capital cost will come down. So Netflix does spend a lot of money. So you'll have to work out saying, okay, it has already got these shows on its balance sheet where it spent a lot of money from which it can generate revenue in the future. But if it cannot do, original programming for the next year or so, it could affect the revenue, 2 years down. Any thoughts from anyone on that? Whether it's good or bad, that there's not much more original programming. Okay. So Zoom, obviously, this is the platform we're using now. So if you look at what has happened, again, the NASDAQ is down 8% in the last 3 months. Zoom is up 93%. But as you can see, there was a bit of a decline recently, even though the market was going up during this period. Anyone knows why?
It was related to all the security issues, things like Google asked all its employees to uninstall the Zoom app from their company laptops. So, I mean, I know they've said they're going to spend the next 3 months or something fixing all their security issues, because I think some schools in Singapore, etc., stopped using Zoom because people got hold of the URL and then were porn and whatever on them. And obviously you don't want children exposed to that.
Yeah, I mean, the problem for them has been they have grown very fast. And with their Zoom IDs, it was just a numerical number. And so just like as kids, we used to, at least, I mean, I've done a few times, but call random numbers on your telephone. You could now put random numbers in a Zoom URL and immediately you are included. So there were these issues. And then there was issues about encryption and, people stealing passwords and those kind of things. So and then also I think there was a bigger issue about racism. So the founder of the company is originally from China. And the interesting backstory to this is that he was desperate to move to San Francisco, and and I think he was declined for the visa about 10 times, but he persisted and he moved there. He worked for WebEx, which was bought by Cisco, which is a competitor of Zoom, and then started Zoom. But there has been a lot of racism about, hey, I mean, the guys in the US, but they're saying, hey, they could be selling it to China and all that. So all of those things have been also affecting. So a bit of a marketing plug here, but this is our app. So you can actually track what's going on, City Falcon. And so here you will see that they hired an ex-Facebook security chief. So they've done a lot in recent times to actually fix these problems. And, as an entrepreneur myself, I sympathize with them. I think they moved very fast, but I think pretty much every big company has always had an issue. Facebook has been known about, with Cambridge Analytica selling our content. Skype has gone down significantly. Google, obviously, we have privacy issues. Also, Google banning Zoom software was actually seen positively for the company, because it means that Google employees who have a Google product, which is your Hangouts or Meet as they call it, were still using Zoom. So yeah, and any thoughts on Zoom as a stock? Would you be buying at this stage? Do you think more and more people will be using it because it's much easier to use than asking for people's Skype ID and those kind of things? Yeah, I mean, one thing again with as value investors, it is quite pricey now, the stock. I think it's more than $40 billion. So there's been a big jump in the company. So at this stage, I wouldn't be buying. Even though I actually love the product with a lot of the features they have. Okay. Another one is Slack. So I don't know if a lot of people know about Slack, but it's very common for tech companies and startups to use it. So a great product that we've been using for 5 years. I pay about £300 a month to Slack, and the stock has basically gone up only 13% compared to 8% on Nasdaq, and compared to 93% on Zoom. There are a lot of differences between Zoom and Slack. So Slack is a collaboration product that does not have video calling yet, but everyone's saying that they should probably do that. Now, this stock is, I think, worth less than, or the price of this stock is in market capitalization less than half of Zoom. Okay. The company is, again, good management. Also, one big difference is that Zoom is profitable. So Zoom has done really well with that, with the pricing. Slack is still not profitable, so that's one downside. But as more and more enterprises, start using Slack, working from home and all of that, the price should go up. And any thoughts on Slack from anyone? And one of the reasons that the stock has also, seen a little bit of volatility is around because of Microsoft Teams. So Microsoft has been promoting their own product a lot to everyone who pretty much has, Windows operating system. Now, I have used Teams and it's quite a bad product. I used to actually work for Microsoft. And so they're forcing people is not necessarily working well, I think. While Slack is something that people will go and download and use it. So just again, if you wanted to again track, you can track it on our app. So you can see that, Microsoft Teams and Microsoft, there are a lot of these discussions. I almost think, and I think, someone put this idea in my mind, talking to, again, some techies, that Slack is a great acquisition target for some of these big businesses, from Facebook that has struggled to build a similar product. Google has struggled with this. Microsoft themselves could be looking at this. And the Microsoft has bought LinkedIn, Skype, all of these products in the past. So this is one stock that I'm tracking. If I could get it at a little lower levels, if I can see a path to profitability for the company, I would be buying this stock. Any thoughts on Slack? Okay. So this is one chart, that we keep sharing pretty much almost every meetup, to kind of keep reminding of ourselves that it's really you for yourself to decide where we are in this cycle, right? So we know that we've pretty much reached a high. So right now with the government efforts, maybe it changes and we reach another high, but we know this happened. Now, the question is, are we over here, which is a bull trap? So this graph looks very similar to S&P 500 right now, right? If you think about it. So whether the question is whether you're here or you're here, right? Which is where, so this was the bottom we reached in March, end of March, and now we're on the upswing. And then, you know, all of this rally is up for taking. So it really depends on where you think we are. I thought before the stimulus action that we are here. Right now, I'm not sure because of all this liquidity at this stage. What do you guys think? Anyone? I think this could have been a good place to do a poll, but I'm not prepared for this. Any thoughts? Okay. So just in kind of summarizing, is there value? The problem for me is, to know value, I need to figure out future earnings. I need to do my calculations. I need to see, where people can survive, companies can survive. And right now there are too many uncertainties. I don't know the long-term impact on earnings. So this is where I wait and watch for now. Even if it means that, I lost out on a rally, that's fine. I mean, personally, I had liquidated most of my portfolio back in 2017-18 because I thought the price earnings was ridiculous. And I had moved most of my money into bonds. So I have to say I didn't make any money out of governments buying the bonds because I didn't have US bonds. But but my view was it was overpriced then. And now definitely with all of these uncertainties, it's even more highly priced. Having said that, obviously there are always some companies that you could, find that could be value, that could have dropped significantly, but I haven't seen many. And the second question is around stimulus and how the governments are going to react after this. Are they going to suck the liquidity out of the economy? Are they going to do it? Or, as we know that, with Trump, he wants the stock markets to go up because that's good for him, election year and all of that. Like how would that play out? Any thoughts here? Okay. Another regular side to kind of look at and remind yourself is, as value investors, look at this graph, read more if you haven't. But what you're trying to figure out is what is the intrinsic value of the company that you're looking to buy, and what is the real value, the market price. And there has to be a gap, which is your margin of safety. So if you look at the price, if you look at the stock market going up and you're feeling this FOMO, the fear of missing out, and you jump into the markets, you need to ask yourself, how much is your potential downside, right? At this stage. And it's different between traders and investors. I mean, a good trader would have a stop loss, an exit plan and all of that, but an investor, you're not going to do that. And so suddenly if things go bad, if a company goes bankrupt, you could see your portfolio dropping 90%. I mean, I've seen some of my stocks, delisting or just bankrupt. So kind of keep reminding yourself is, so, I mean, I'm in a lot of WhatsApp groups with a lot of people from the 6,500 people, value investing club. And you hear this a lot. Should I buy now? Right? Or the price is already at, $1. How much lower can it get? And we have to remind ourselves that the price of a stock could go as low as 0, right? So you could lose everything that you have. Another thing we discussed last time to remind ourselves is, and of course, this we discussed before the stimulus. So the idea was that the previous recessions, the interest rates were quite high. So when we went into the recession, central banks could gradually reduce interest rates to support the economy and move it up. Now the interest rates before going into this have already been quite low, right? So there shouldn't have been, theoretically, you would think there isn't much that the government can do. But given the US and US dollar, they've gone about doing things that most of us didn't expect. So this time, unfortunately, is also not different. It's the same as last time. For people who are completely new, just want to quickly show you, over here. So we have a page where, sorry, this is my Slack. cityfalcon.com/meetup, where we have all the historical ideas. So you can see over here 16 pages of ideas. And also what we've done is we've created an Excel sheet, which is a tracker. And what this does is it tracks everything we've discussed from 2015 onwards. So the first stock, and this was a stock that I discussed and I made some money, was we bought Yandex at that point. And even today, it's like up 180%. But then the last stock we discussed, just in February is down 56%. And so you can see all the different ideas we discussed. And then you could, go back here and let's say, if you're interested in Smart Sand, you can download the file here, right? All of this is completely free. You don't have to do anything. In fact, if you think you're interested, reach out to me and I'll connect you to the people who've done the research and, can guide you more. So you can leverage all of this for yourself. So look at some of those ideas and see if, anything interests you. The other thing is look outside the US. I think a lot of us focus on the US because it's much easier to trade, there is high liquidity and all that. But right now with what has happened, there might be opportunities outside the US. Any thoughts on this? Is anyone looking at other markets? Let's say UK, for example, where they might see value. Okay. So things I'm looking at are, UK, obviously one. So what you see here is the light blue is S&P 500, while FTSE is here. So FTSE is down 25%, while S&P is 13%. And this kind of, to me, shows the difference in the response from the governments. I think the US, UK has not gone as crazy as the US with all of this, funding and bailing out stuff. You will see a similar trend in India if you have interest, 25% down. And India has not been that significantly affected apart from the lockdown, and it's still growing. So there's an opportunity there. And the same thing with Italy is again. So everything is down like 25, 26%. And they haven't seen the kind of jump that you saw in the US. Look at this jump. It's not that much. Same with, same with FTSE. It's not that big a jump that you've seen, just a 5% up move from the bottom compared to 25% for S&P 500. Any thoughts on all of this? Yeah, go on, Tom.
Just to say that my focus has always been on the UK, but then I haven't tried value investing in individual stocks. I've only invested in index like. So I've seen how those have changed, but I haven't really sort of say fairly new to the idea of value investing and investing in individual stocks.
Yeah, and a good point. Actually, thanks for raising this. So one thing that you have to be careful about, and we wrote a blog post on this, is with any kind of passive funds like investing in index, the issue is that, like, we've been told to do this. So, people say, hey, either buy Berkshire Hathaway or you buy FTSE or you buy S&P 500. The problem with all of this is all this money that comes in, as a passive fund manager, they have to kind of buy all of these stocks by compulsion. And so what typically happens is the index, the companies in all these indices are usually, the valuation is much higher than companies that are outside these indices. So if you really want value plays, you will be able to see outside of the index. That's my kind of personal experience. And if we see a decline right now in the markets, if we see a bankruptcy, what is going to happen is this kind of passive money is going to be pulled out of these mutual funds and ETFs. And that could bring the markets down further, because as a fund manager, you don't have any option but to sell. You're not going to look at, hey, there is value because maybe this company is trading only at price earnings of 5 times, but you're like, hey, my investor said I have to sell, so I have to sell. So that's one thing, Tom, you'll have to be careful about in this market. So one of the things that I am personally kind of through my trading portfolio and also investing for the medium term is oil. So, you've probably seen all the drama around, what Saudi Arabia is doing, Russia is doing, US getting involved. But basically oil is at a level right now where if the oil prices don't go up, a lot of producers, especially in the US, are going to go bankrupt. Okay. And again, maybe the government supports them or maybe they don't. So what is going to happen is over a period of time, you will have a supply crunch. Okay. And as right now the demand is low and people have, bought oil in super tankers and stored them. So right now, pretty much there's no demand for oil, which has meant that the oil prices are going down. So this could be a good opportunity. So I'm going to buy a little bit, averaging it out as it goes down, and then hold it for 1 year, 2 years, 3 years to see potential upside. So remember that it fell from around $60 before this crisis started and before all the drama with OPEC. So anyone else tracking oil or playing with any companies that deal with oil? Okay, not many. Any other markets or opportunities that you guys are thinking of at this point? Yes, Sandeep, go on.
So I'm tracking oil in terms of Shell or BP or whatever, but I'm waiting for the trend to turn completely positive. Similar in hospitality, like you go to IAG or Royal Caribbean or Carnival or things like that, So the whole hospitality industry will come up, at one time, whether it's 6 months, 1 year down the line. So there will be value opportunities. Either you can take the risk now, or you can wait for the trends to sort of form and then take the risk.
Yes, Sandeep. So you're thinking like a trend trader, right?
Yes.
With this, yes. I think the challenge with this is that so let's say, imagine a vaccine gets announced, right? And then you will suddenly see these stocks jump like 100%, 200%, right? Because it'll be just crazy amount of people trying to get in. Yeah. So you will have that issue. So instead of what I do is, if I see value, I personally buy a little bit, keep holding it, average it down if it goes down, as long as I think that there is value in the long term in those things.
Yes, I think everybody has got their own strategies, but I've got, so I've developed sort of, instead, like you buy value, I've developed some indicators which will give me a timing, where I can go in. By the moment I'm keeping out of the market.
Got it. Makes sense. Okay. Anyone else? All right. Another thing I'm looking at personally is the online advertising market and how this is going to change. So right now you will see that it will significantly affect the businesses of Google, Facebook, and others who've been pretty much minting money. And the way they mint money is that, they make advertisers bid for advertising, right? And so as, the economy does well, they make a lot more money. And then businesses like ours, we have to pay a lot more for each, user eyeball that we get through the platform. So you will see that their earnings are going to get affected significantly, also their cash flows. So right now these companies are working comfortably, but maybe that might change if this goes on for longer. On the plus side, now you have a bigger online audience, so maybe the marketing opportunities are higher, even though there are less people who are marketing. Also, like, people who are marketing are changing, right? So instead of me seeing a traditional ad, now I'm seeing ads about online yoga, or some kind of online training or something like that, or a home gym, which is why I bought a home gym, because that was interesting for me. So things are changing, and all of this, basically, right now the cost of acquisition is low, and then there are a lot of platforms that are playing in this space. So I don't have any ideas or anything at this stage. I just wanted to bring it out, saying, hey, this is something I'm looking at personally, also from my business point of view. Anyone has any thoughts on this space, on the online advertising space? Yeah, go on, Tom.
Just off the top of my head, I mean, I haven't really thought this through, but online advertising, and more widely on IT, we're talking about Zoom and Slack earlier. Is this an area where it would be worth, would you consider sort of spreading risk across a number of, on the basis that some of them will succeed, as there is a trend towards all of them, but you can't really it would be difficult to pick the winners, because it's such a competitive and new space.
I absolutely agree. I mean, diversification is super important, irrespective of now or whenever. So I agree with you. In case, so I agree. I mean, what I try and do with a lot of these things is, I try and evaluate the products themselves. I look at their customer service, I look at the pricing, and then try and make a judgment. Having said that doesn't necessarily mean they will all succeed. So I agree, I think spreading the risk is a good idea generally. So yeah, makes sense. Okay. So these are the themes that we've discussed early on as well. I mean, I'll just keep adding to what I'm tracking, or maybe reduce it over a period of time. So we've pretty much spoken most of these things, maybe even climate change, people talking about being vegan, lab meat, those kind of things. We don't want to eat, meat that could spread more viruses at this point. So any thoughts or any other themes that you guys are watching? Okay. All right. So what is my strategy at this stage? And I keep refining it. I mean, this is similar to what I had in the last webinar, so it's not changed. So looking for certainty, right? I'm a little bit, probably this will go off if the way it continues, or maybe I'll not short any US companies. So as a value investor, if I see something is overpriced, I'm ready to go and short a company with stop losses, so you don't lose a lot of money. If I decide to buy, it will be with companies with strong balance sheets who can survive next 1 year, 2 years without taking a lot of aid from the government. And then I'm taking non-company related risk. So anything where I don't have to take that micro risk, it's all macro, which again gives me the support from the government and bailouts. So like, as I discussed, oil, or indices, which are more diversified, like Tom mentioned about diversification. And then I also use a lot of hedging tools with wicks and options. Any thoughts on this? Any other strategies? I mean, Sandeep shared his strategy about trend trading. Anyone else has strategies that are working for them? Yeah,
well, it's not really a strategy outside the scope of this conversation. But I've gone for trying to diversify my investments as widely as possible, and not just in terms of stocks. I've been diversifying across of investment, and it's only now that I'm really starting to look at market ups and downs. I've been looking for long-term investments up till now, and one area that I'm investing a lot in is in renewable energy. So you're talking about, I think there's a lot of future in the renewables market, and the way I've been doing that is not actually through stocks, but through loans, through abundance investment allows you to make loans directly to renewables companies, or the way I've been doing it, buy up other people's loans when they're selling them on. And I'm at similar sort of loan platforms for property, for business property as well, for property. Not something I've gone into yet, but it's one of the ones I'm looking at.
Yeah. So these are similar to peer-to-peer, or are these like funds that are investing?
Yeah, they're similar to peer-to-peer, basically. Yeah.
Yeah. Okay. Got it.
Oh well, a lot of the ones that are doing peer-to-peer loans, or that of loans, are also bundling them up to provide them as a fund as well. So yeah. I'm looking at both in and funds.
Yeah, makes sense. Okay. Right. So, I mean, this is generally what I had to share. What I was going to do now, and I'm okay for anyone to drop off, but I was just going to quickly show you how you could leverage our platform, City Falcon, if you're doing your research. So you don't have to stay on the call if you think this is not useful, but I'll quickly show you. So this is kind of my tracking sheet, and you can go to cityfalcon.com. It's free, so you can set this up yourself. And I have a lot of things that I'm tracking. And with our platform, what you can do is you get basically content coming in from 5,000 plus sources in 30 plus languages from around the world. And so this is, for example, the top rated stories from the last 1 day for my kind of watch list. And then you can obviously consume information. You can like, dislike, you can hide, you can manage your content much better than you would be able to on Google News or Google. And then you could also get latest information. So for example, if you're seeing, this is from 22 seconds back, right? So we pick up things that are happening in real time. And we also have our scoring using machine learning. So all of it is kind of machine learning AI that we use. And then, of course, you can create multiple watch lists to track different things. What we also have is trending. So we can tell you what is going on in the markets discussion. So for some reason, Brexit is back into discussions. What is happening? Oh, so Brexit talks supposed to resume next week, right? So it picks out things that you need to know about very quickly, like trends. Analyst downgrades, as you would expect in this market, is an issue. So you can see that, and you can see more of it. Just click more stories, and you can see all the analyst upgrades that are going on right now. And it's all real time. This is 40 seconds back. What you can do is then you can track other things as well. So for example, let's say I want to look at who is getting a strong buy rating in this market. So I can quickly see all the companies that are getting those ratings. This is all of it is real time. So you can consume, basically news, and we're going to soon add more features, including SEC filings, London Stock Exchange RNS feeds, more machine learning tools, make it much easier, all of those things under the platform. Also, if any of you is tech savvy, you can use our API to actually download all of this information into Excel sheets or Python and create your own algos and work through that. And yeah, and there are a lot of features that you can actually use on this platform. Any questions on what we do? We also have a mobile app. We can also, use Amazon Echo to use our product. All right. So thanks a lot, everyone. So, this is, so we'll try and do this every 3 weeks. Also, given that we found there are a lot of people who are very new to investing, we're going to restart what we had before in London, which is kind of investing for newbies. So we talk about basic things like what is price earning ratios, what is enterprise value, market cap. So we'll hopefully launch that. I think I'm trying to do that in a couple of weeks' time. So yeah, thanks a lot, guys, for joining. Have a good rest of the day or evening, depending on where you are. Thanks a lot. Bye.
Cheers.
Thanks. Bye.
Bye.